What's up, guys, and welcome back to episode 8 of the Robinhood 2K Options Trading Challenge. And in this series, we started a Robinhood account with 2K, and we are trying to grow it to 3K as quickly as possible. The rules are simple, options only. That means no stock positions allowed. And in this video, we're going over all of the trades that were made during the week of September 26th to see how much we were able to profit this week. But before we get into all of the trades, go ahead and drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So let's start off by taking a look at the S&P 500 or SPY. This is the underlying that we're primarily trading in this challenge because of how liquid it is. It's just easy to trade on. And what we have here on this chart is we have Bollinger Bands, we have an RSI, and we have the MACD. MACD is telling us basically nothing. We don't have a crossover, so we don't really expect any upward move. Here with the RSI, we're actually getting very close to oversold territory. So 20 is primarily considered oversold, and we are sitting at 28. So we're getting close to oversold. And then the biggest thing that we can kind of get away from the chart is that we're trading at an all-time low. So we have actually passed the all-time low. And if you see on the 26th here, we were actually basically right at that all-time low, and we got this bounce up here in the first couple days of the week, and then we basically went back down and actually broke through these all-time lows for the last year. And really what we're kind of seeing is a contraction in volatility over the last couple weeks. Because we had a lot of news events over these last couple weeks, we had a lot of dramatic moves in the market. But now we are starting to see that, that news is starting to get baked into the market, and we're seeing a little bit lower volatility. In a week or two, we have additional data coming out, and that's when we'll start to see volatility spike up again. But for now, we're still seeing volatility kind of contract as the market prices in the news that we've received over the last couple weeks. So last week we had a very tough week. The market was shooting to the downside, and that really hurt our account. So we made this trade actually last week for about a week and a half out for this Friday, and we were able to get all the way out of the money here at 349 and 348. And we needed to be over aggressive on this trade to try and basically make some of our money back. And it was a good time to be aggressive because we kind of saw volatility starting to contract as news kind of started to get baked into the market. So we put in 3 contracts here for $9 a piece and ended up getting a fill for $27 in total. And this trade was more of the same. So the market shot down again. You can see there that the market was down over 2.5% in a single trading day. So we went out again to Friday, and we were able to get so far out of the money on this trade that it was kind of ridiculous. So we were able to go all the way down here to 343 and 342 and put on a put credit spread. And again, we needed to be aggressive. I didn't want to be too aggressive where maybe the market keeps moving down in an insane way. So I only put on 2 contracts this time for $8 a piece, and we were able to get the fill for a total of $16. So something I've been trying to add to my account are debit spreads. And here is one of the stocks that I absolutely love in the market. I've made a lot of videos over it recently, and that is Google stock. And here we were able to go all the way out till June 16th of 2023, and we are trading a debit spread at the 100 and 102.5 mark. So basically, if the stock goes above $102.50 by this date, by June 16th of next year, we will be able to profit around $140, which will be a double up on our money. And we're only risking $122 in this trade. So overall, I felt pretty good with it. So I don't like this trade because it doesn't align with my strategy. And I talked about this in the last video, but this is a put debit spread that I put on. And I went plenty far out in time. So I went to December 30th because I wanted to basically put on a hedge here. So what I did is I put on a put debit spread for the 362 and $361 strikes. And what that does for me is if the market moves below that mark, basically my break even will be around $361.50. But if the market moves below 361, then I will profit. I will make a full profit. I'll make around $50. I end up getting a fill on this trade for $44, but I don't like these types of trades. Again, they don't align with my overall strategy with my long-term accounts and other accounts. And this was probably the worst trade that I put on this week. So the market was actually trading up by about 1.5% this day on Wednesday. And we put this trade in and we were able to get a decent ways out of the money. But overall, we were able to come down here to $354 and $353 and trade a put credit spread. And we were able to collect around $9. I think because the volatility was still high in the market, even though we were having a move up, that I was still able to collect a decent amount of premium. But overall, this was a little bit more risky of a trade as the market, was still trending to the downside. And here we have the last trade of the week. So again, we had another 2.5, almost 3% move down in the market. And this was a great opportunity to put on some trades. So we were able to come down here. We were kind of trying to target that 90% mark, but we already had trades on around that 90% mark. So it's always difficult sometimes to get fills around that point. So we came down here to 351 and 350 and put on a little bit more aggressive of a trade. So we put one contract in for $13 and ended up getting a fill at that price. And here we have the Excel spreadsheet where we are tracking all of our trades. So we are on week 8. Again, remember, these are all the separate weeks. We have them divided out in here, and we have this blue box next to our current week. So you can see all the trades that we made. So again, we have that $27 trade that was 3 contracts. We have the $16 trade that was 2 contracts. That trade I didn't mention, but we actually closed it out early for a $2 basically debit that we had to pay. So $1 per contract. Still obviously a positive trade in there. And then we kind of were doing that to free up capital because we did want to make these last 2 trades. And I wasn't comfortable with where we were sitting at in terms of how much money we had on the table. So we kind of took that money off the table and then put it back on with these last 2 trades. So again, $9 here and $13. And again, the volatility was very high in these last 2 days that we were able to make these trades for this week. So it was really a good opportunity to put those trades on. And then down here, again, we have SPY, the debit spread that we talked about, and the Google call debit spread that we talked about also in this video. So those aren't really considered in the total that we have up here, but in total for credit on these debit spread or these credit spreads that we've put in, we have lost $287. And all of that really comes from week 7. So last week, the market just basically killed us. It was a very tough week. If we took that out of consideration, we would basically be break even across all of our totals. Overall. So this week we did have a positive week. We're getting back on track and we need to keep that going. So I'm going to kind of pay attention to next week, try and focus on not over trading next week, and especially the following week as we get some news alerts coming out. I always like to end off the video by showing you the total account. And you can see here, it's been a crazy week. And honestly, I think this is kind of misleading. So it's saying that we're only up $8.84 over the last week. But if you actually go out a little bit, you can see that we were way down at basically the end of last week. We were down around $1,500 and we have made it all the way back up to $1,600. So in my opinion, we're actually closer to probably $100 gain on the week. And that comes from, a lot of good trades and trades working out for us and volatility basically kind of, contracting a little bit. Over the next couple of weeks, we'll see it expand as, we see some CPI data. But I wanted to get into something and I want your thoughts on this, guys. So if you made it this far in the video, first off, I really appreciate it. Drop a like down below and make sure you subscribe for more videos like this one. But let me know your thoughts on if I started trading the wheel strategy. The wheel strategy would obviously involve owning 100 shares of a stock. Specifically, I'm kind of looking at SoFi. I like SoFi. If there's other under $5 stocks, maybe like an Oatly, something like that would be another good option to trade on. But overall, I think it would add a lot of value to this challenge. One, to show you guys, what's possible with the wheel strategy, but also 2, we're trading at all-time lows right now. And this is the best time to trade the wheel strategy because there's a massive amount of volatility. So you can collect a massive amount of premium when you're selling puts or selling calls. And you're also getting into shares at basically all-time lows. And obviously that presents a very good buying opportunity. SoFi at one point was up around $22 to $25. So that has a lot of potential upside that could really help the account and really help us get back on track. Obviously, we've only lost money in this account. If we go all time, we are down $400 and we need to kind of start making some money back. So overall, let me know your thoughts on that. If you think that's a good idea or if you think I'm cheating, let me know down below in the comments. As always, guys, if you like the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button and have a wonderful rest of your day.